As the church bells in lovely Barrio Los Angeles, Costa Rica ring in a new hour, it is time for a live market conversation stream. I'm Jerry Hall, broadcasting from beautiful Costa Rica. Tonight in studio, we have Jose, an insurance specialist who is knowledgeable around things like cryptocurrencies, monetary policy, and is going to share with us practices and principles as it pertains to protecting wealth. Many of us are in this game and have been for a long time with that exact end goal in mind, to have our investments create wealth. And for many of us, it could be generational wealth. And there are a lot of elements to that it's important to understand. Keep in mind, nothing during this broadcast is going to be direct advice to you, the individual. It is beholden upon you to do your own research. But feel free to refer to this video for reference as you hit those keys and take that Google dance of information. So allow me real quickly to say hello to some of the kind folks that have already introduced themselves in the live chat. We got Rob from Digital Asset News. Rob, you're killing it lately, bro. Killing it. Although, Rob, I got to tell you, the one question you did not get to Alex regarding how yield is created was how sustainable, as the valuations of the assets reach new all-time highs, is it to continue at their levels? The cost of those tokens, because we are in a fixed supply market, at some point there's an inflection point. They will have to readjust those interest rates. That was not brought up. However, I thought you did a great job. Simon, nice to have you. We've got Wade P. Kelly. And, boy, a lot of activity. All right, guys. So let me bring in Jose. Jose, Jose, welcome to the show. How are you tonight, man?
I'm excited. I'm good. I'm excited. I'm actually calling in from Chicago. I didn't realize you were out in Costa Rica, so I'm excited to actually, be on the call. Thank you for having me.
It's a pleasure to have you. You know, I've had the good fortune of having folks from the tax element of this, from sheltered investment sections. So IRAs, Roth IRAs, sheltering and protecting assets from taxation, etc. And one of the elements that isn't a part of the conversation most of the time when we're talking about wealth is insurance. So why don't we quickly start an overview from you, how you see the insurance industry being important for those of us that are developing crypto wealth to be cognizant of, and like what role do you see insurance playing in protecting wealth and even the ability to pass it on generationally?
Yeah, I love it. Well, first and foremost, I feel like, insurance, when you think about where it fits within the entire economy, you got to take a look at insurance is basically the backbone, right? You go get a car. Before you drive off the car lot, you got to go get a car insurance, right? Before you get a house, homeowners insurance, right? A lot of people, they have health insurance, but one of the biggest things that is overlooked, I would say, is life insurance, right? And that's the biggest wealth creation. If you were to take a look at which aspect of the insurance industry is actually going to help create wealth, I would say is really want to focus in on the life insurance industry, as well as, how you can use it as a wealth creation, but also wealth preserving, right? And there's two ways that you can take a look at that. But overall, I think that insurance is the really a foundational kind of a safety net that you're putting in, regardless of what your journey might be in life, right? Everybody wants to get to that $1 million, right? Go for it, brother.
Jose, hey guys, in the stream, throw back these really choppy, and I mean, I couldn't barely hear or make out anything that you said because it was like the video was super, super choppy. We have an 8
Okay.
second or so delay on the chat. But hey, guys, throw in, is Jose coming in real clear for you guys? If he is, then it doesn't matter. I'll watch it on the replay.
Yeah. Can you guys hear me okay now?
Hey, I can.
Okay. Yeah. Sorry about that. Maybe it gets a little better as we keep going. But how about now? Thumbs up there.
You keep going. It was me, not you.
Okay. All right. Sounds good. Well, yeah. I mean, like I said, that insurance really is the foundation. You're gonna start off by having all these investments, but what's your safe money? Where are you actually housing the foundational wealth, right? And that starts off with insurance, right? You lay down that safety net where if anything were to happen, boom, now you're relying on your insurance policies, your insurance through whatever it is, whether it be a car insurance policy, a health insurance policy, or even a life insurance policy. That's always the case.
Well, let me ask you this. If I have my assets and there is no quote unquote third party risk, in other words, my assets are not being held by anybody else, I have them, I'm custodying them, then what's the need? I don't understand the need for insurance. What does insurance do that a will or a trust or an LLC wouldn't do?
Okay, so that more so speaking on contractual basis. So everybody should know right off of the bat that insurance, all it is a contract between you and an insurance company. Same thing like a legal, contract with anything else. There's two parties that you want to make sure that there is, terms, whatever it is that you're paying for. In your essence, it depends on what you want to leave as a legacy, because a lot of people, they are building wealth from the ground up. 90% of people, living paycheck to paycheck. There's not a lot of people that are, a lot of people are wealthy today. Don't get me wrong. There's a lot of wealth creation happening in the U.S., right? So the conversation is when you're putting that money in, when it starts to grow for you, where are you able to take, and when are you able to take that money out is long-term growth. So for you, it depends on where you want to put that in money in as it pertains to you. So it all depends on what your needs are. My terms, I decided that if something were to happen to me, I have $1 million that my last name will inherit. So for me, I guarantee that $1 million, a legacy is being created if I pass away too soon, or if I get sick along the way, or maybe, hey, I am on track to making $1 million. I am on track to being a millionaire. I am on track to being a first generation millionaire, right? Through that, we can't deny daily and, everything going on. We have the pandemic. We have so many things that could happen on a daily basis. So that policy, that legal contract that you are putting yourself in is now going to say, hey, I guarantee that my last name will inherit that legacy with or without, me being here. I'm going to make sure that actually is happening. So a lot of people, for me, I'm a little bit selfless. So for most of my wealth creation is for my family. So that's what I would say. That's where that would fit in.
I understand.
For the average person.
Okay, so is it fair to say that I can establish, let's say, a probabilistic number? Let's say that I forecast my assets to have a valuation of $5 million in 2025. But here we are in 2020, and I want to get a life insurance policy. And I want that life insurance policy to value my life at $5 million. Mm-hmm. I am just now paying you today in whatever contractual period of time that we establish, whether it be monthly or quarterly or yearly, the premiums on that insurance policy. And in essence, I have a $5 million valuation in 2020, even though I actually don't. But the probabilities are that my assets will be that value at that forward time. And if I should die, you are the first lien holder on those assets as you pay the beneficiaries of the insurance policy. Am I correct in the structure, or am I completely sideways?
I'm not sure. I'm not sure if the question is coming in as a contractual, like how it's structured in a sense of what the purpose of the insurance is. So really quickly, you have so many different insurances. My specialty is life insurance and retirement. So I also focus in on annuities, right? So my biggest thing is making sure that people are protected in life, not just in health, but also making sure that they guarantee their wealth long term. So you ask, okay, let's say I have $1 million net worth today, but I want to have 5 million, 2025, 5 years later, whatever. You want to make sure that, hey, if I put my money in here, what's happening is that a lot of people don't realize that life insurance is also an asset, right? So just like you're building equity in a real estate portfolio, or just like you're building equity in any portfolio, the life insurance is something that you're going to be building up, and it's also going to be tax advantaged. So when you say, hey, I'm going to put my money here, that money is actually going to start to grow tax advantage, and it's going to be able to now start to draw from that in retirement. So it's going to benefit you not just for leaving that legacy for your family, but potentially starting to pull out when you are ready to, retire when you are 60, 65, 70, or even if you want to start to retire earlier. That would be the conversation with a lot of millennials like myself as well, right?
Well, let's deep dive into the tax element, because for many of us, we will be in positions that if we just capitalize these assets by selling them, we're looking at 15 to 20% tax liability at minimum. Walk me through the advantages of establishing a life insurance policy as it pertains to the disbursement end from a taxation viewpoint.
Beautiful question. So I see we have a question here talking about, is it full term life? So the term life, you got to realize that term life is just a simple policy that actually just covers insurance. So you're just paying the cost. I want to talk about where the tax advantages lie. If you're going to get a term policy, you might not get cash value. I 100% guaranteed, right? There is no cash value in those term policies. Those are temporary coverages. They're going to lapse. They're eventually going to expire. You're only paying that super cheap cost for the biggest bang for your buck. Now, on the opposite end, this is the conversation that we're having right now with the tax advantages. When you're putting money into a permanent policy, the old permanent policy we used to call whole life. I'm sure you've heard of whole life as well, right?
Yes.
A whole life, the way it's structured is that the cost remains level, where the I would say the actual cost, so the cost to the client stays level, but the cost to the insurance company starts to gradually increase. So the concept is that you pay more in the beginning, right, where it's cheap, where it levels off, and then you're still going to be paying the same where it's super expensive at the end. So that's whole life. Now there comes a time where you call a universal policy. No, now that's the new policy. The new policies are essentially now the cheap form of term, structured in a way where you can build cash value that can also pay for the policy in itself in the future years, just like the whole life. But in this case, we have different interest strategies that are also tied to the market. So you have your indexed policies, you have your variable policies. You want to sit down with your agent, right? You want to sit down with your special, services, the financial services professional you're sitting with, whether it be a tax professional, a financial professional, a life insurance professional. You want to make sure you want to say, hey, what's the best policy for me? Now, the universal index policies offer an index growth, and we can go more into index, how people can grow their money without losing, because I think that's another big problem here with this whole 2020 pandemic, is that so many people have no other option but to say, hey, I'm going to take that loss in a 401k, in an IRA, in any market. But there is an option, right? People have to know there is an option where you can grow without taking any loss. So continuing with that tax advantages, all the money growing within a life insurance policy is under a tax code. All right. It's all legal, right? So this is all legally established within the IRS handbook, which is essentially a 7702, right? And if you guys want to do your research as well, 7702 is a great, it's just a tax code that says all the money growing in a life insurance, all the money received on the back end from a beneficiary. So like, let's just say I get a policy. I'm going to name my mom as a beneficiary. I'm going to name my brother as a beneficiary, right? I'm going to name my fiance, my wife, as a beneficiary. So that money, guess what? The IRS, they don't have to know about the $500,000 life insurance policy I just gave to my brother, right? So if I pass away, they don't receive that. So number one, the beneficiaries receive a tax-free benefit. If I were to pass away, my mom doesn't have to claim $1 million in a life insurance beneficiary because it is a tax-free receipt. So number one, boom, beneficiary. Number two, while you're alive, I think is a big thing that you can actually grow your money, tax it. And that's another reason why we love crypto as well, right? Right? Tax advantage. You're able to grow your money. There is going to be a lot of regulation, right? Changing all the time, but you have to know the safest, the most, right? Most, I would say the most, I wouldn't say conservative, but you're able to have guarantees within the life insurance industry that offer you as well tax advantage growth, where you can pull your money from retirement. They call it the rich man's Roth IRA, right? As you know, Roth IRAs, those types of accounts, they typically have a limit as to how much you can contribute. And as you're creating your wealth, man, I can't just put in 5,000 a year, 6,000 a year. Let me start putting in more money into these accounts so that I can retire when I want to, right? And now you can establish your own personal vehicle that you can establish, and now creating that tax-free retirement when you're ready to pull out. So I hope that I
love all that. I love all that. Here's the one element that interests me. Now I'm in the chat here. We'll have other things. The ability, because you said this is the thing that's attractive to me. The fact that a policy, whether it be universal or whole, can be an asset. If it can be an asset, that means it can be collateralized. I love the idea of collateralization versus selling to acquire capital.
Mm-hmm.
Okay, so that's a big field of study for me right now. Matter of fact, I got a little experiment going where I'm collateralizing some assets against a passive income stream that I already have going. So basically, I'm creating a zero cost of capital way to acquire some upfront capital now that can go to work and make some more money for me. But that's kind of second level, third level shit, which I won't get that into on the stream. Talk to me about the ability to collateralize these policies, and then are these policies able to be structured in shelters? Should I develop an irrevocable trust? Should I form me, the individual, as an LLC?
Yeah, that's a great question. So when we talk about a business owner strategy, we can also talk about another taxation benefit where, now there's a tax deduction on behalf of the business owner, right? Where now the business owner is able to pay for that. So that's a different tax advantage we can talk about as well. We can get into that. I'm sure we've heard of a few things. Back to the question, how that's able to collateralize. Because life insurance is an asset, that you're able to build equity, just like as if you were to build equity in a home, you're able to pull a loan against that and then use it and monetize it whenever you need to. So I think somebody in the chat box put in infinite banker. That's exactly what's happening, right? You're creating an infinite banking system. And for those of you guys that haven't heard the conversation of the infinite banking system, phenomenal thing to research, and definitely something that you guys want to get into because it's out there. It's nothing that, hey, it's nothing that we want to keep from you. Like, no, these are things that are out there that we want to make sure that people are exposed to. So the infinite banking concept is something you guys want to get into. So that's how you're able to collateralize it, right? Where you have, hey, bank, I have $1 million life insurance policy. I have about, I would say $150,000 cash value in there, maybe even more, depending on how much you've been able to accumulate during the time. and then saying, hey, I want to start a business. This is my business plan, whatever may be the case. I want to borrow against, but I want to make sure that you give me the approval rates, and even getting better loans or even better opportunities in the future when you are able to collateralize that. Why? Because you have higher standing when it comes down to, again, the collateral. Hey, I'm established. I have the backing, and not only that, I can pull from if I need to. And if anything were to happen, this will be now a tie to you. So moving forward, another thing you can do is actually name the creditor as partial beneficiary. So I've been having a policy for about 4 or 5 years, 7 years, 12 years, 20 years, however long I've been having a policy. Mr. and Mrs. Client, we're able to approve you for this loan. Okay, great. How much would the rates be, right? How much would this loan be? How much would you be able to approve me if I put you down as a collateral assignment as a beneficiary to my life insurance policy? How would that sound? Bank and Mr. Banker, banking person, right? And they're going to sit down with you and say, well, this is exactly what we're looking for. Here's what we're able to offer. And then now you're able to have that conversation, like Jerry said, is to make more, right? More of that money work for you in the future. So I'm definitely up for that. Yeah.
Right on. I want to take a pause just for a second. There is, excuse me, because this topic isn't part of most of our daily conversations, right?
Yeah.
The cryptoverse is filled with use case information every single day. Who are the partners that are signing on? We look at supply and demand metrics all the time, right? All these things are part of our everyday conversations. Insurance, not so much. And so I want to give the opportunity for anybody in the stream, whether you're participating in the live chat or not, if you want to come in studio and ask your question directly to Jose, hey, that's what this show's all about, market conversations. Put in the chat, hey, I want to be in studio. Brady will get you a link. Just submit your email address. We will send you a link to the show, and you can come right in here and have a discussion with Jose. These are topics that, in a sentence or 2 sentences, to get a real context that is something that you can really benefit from, it's difficult. I know. I've been in many live streams, and it is difficult to try to conduct a conversation where one person is only getting some written word. So if you want to come in studio and actually have a conversation, you come to the right show.
That's awesome.
Put it in the thing. Oh yeah, we're all about user experience here. So I want to quickly say welcome to Tony. Tony, it's great to have you. Tony's been a supporter of this show for a long time. Matter of fact, all the stuff I do, Tony's very, very supportive. Heirloom Heritage, good to have you in. Looks like you're very active in the chat. Let's take a few minutes, Jose, and share with us. So kind of like you joining the team kind of thing, right? What do you got going on in the crypto world in your personal life? I am absolutely certain that you have some engagement and involvement with digital assets. Let's talk about that.
Yeah, well, I'm glad to be talking. I mean, to be honest, with crypto and everything, that's not my very special kind of niche, right? My thing is the safe guarantees, the insurance, right? I'm actually building a business and agency where I'm able to grow and scale from there, right? On the opposite end, I actually learned most of the all of the trading stuff, all of the day trading, all that stuff with my brother, who actually had a double degree in business and finance, right? And he exposed me first to trading commodities. Right? What was that like? And trading commodities, and he would always, get up and down. But then that flipped into what he ended up, talking about now is Bitcoin, crypto, and then, all these other coins started to pop up. And my mind is just like, wait a minute, I know there's the US dollar, right? The yen, right? We got, all these pesos here. So taking a look at the Forex market, and then now all of a sudden this new player comes along that was supposedly invented a while back ago, but now is actually making a actual big presence here. I'm excited for it. I haven't really had the opportunity to take advantage of any of the the opportunities that Bitcoin and that is essential. That I would say that entire world, right? Because I would say that's another world of its own. So I haven't had any opportunity to take full advantage of those, but I am it is something that I'm excited about. I think it's definitely something that's looking promising. My brother definitely, he has a few assets in there as well. I'm sure he has his own portfolio, but that's something that I'm still kind of barely tapping my foot into. That's a great question.
Well, I'll tell you what, you've come to the right show.
Yeah.
Because when anybody says to me, I haven't got the time, or I don't have the resources, or I don't have that, I ask myself, okay, what are the so what I would ask you this question. You appear to be an intelligent, educated man. I'm going to say you're 32 years old. I have no idea how old you are, but I'm guessing.
Okay, I appreciate that, brother.
You're 36. What are you? You're young, right?
I actually graduated from my undergrad 2018, so that makes me 24 years old.
Oh, you're 24. Okay.
Yeah.
You're a young man.
Yep.
But you probably, through your education, recall technological innovations like the personal computer, the cellular telephone, and the internet.
Yep.
Right? Now, if I said, Jose, I'm going to give you a time machine, and I'm going to allow you to go back before and invest in Amazon, in Google, would you? Knowing what you know now?
Absolutely.
Okay. Then the next question is, what clarity do you need to see that the blockchain, the innovation that is blockchain and the internet of money will dwarf every other one of those innovations as far as return on investing to investors who are getting in now?
Yeah.
What do you need to be convinced of that? What kind of data? What do you need?
Absolutely nothing. And that's why I'm excited to be on the show, because I'm a fan of Bitcoin. I'm excited to really get into that. It's something that I've always been taking a look at for sure.
Okay. So I'm sure you understand the term dollar cost averaging.
DCA, yes.
Okay. So for instance, now I may not be exact on every single penny, but I'm going to give you a little statistic here. Had you dollar cost averaged $2 a day, which is half the cost of a nice caramel macchiato at Starbucks every day.
Yeah.
And you put it into either Bitcoin or XRP over the last 3 years, your total investment would have been around $2,500. Okay? $2,500. You'd right now be sitting on a net return, right? Or a valuation of, it's staggering. It's $56,000, $83,000.
Yeah.
Okay. So my question to you is, how can you afford not to be dollar cost averaging to the next largest technological innovation that the world has ever seen?
Yeah, that's a fair question. I think with everything that you just presented to me, I don't think there's a proper way to answer that without looking foolish,
Well, you just asked me, Jerry, what do you think? Jerry, give me some tips. Okay, I'll give you some tips.
Yeah,
Jose.
Yeah, sure.
Go get an Uphold account. You're a U.S. citizen living in the United States, right?
Mm-hmm.
You have a bank account, right?
Yes, sir.
Open up and do your KYC with Uphold. Okay. Link your bank account. That is the lowest cost approach to an on-ramp.
Of course.
All right. Use their wallet function. There's no fees. I mean, they make it super, super easy for you. And you start dollar cost averaging in to the top 3 assets on the board: Bitcoin, Ethereum, and XRP. Whatever your deal is, your $2 a day. 66 cents a piece.
Mm-hmm.
And you just religiously forget that money ever existed. And you're going to rambling for my email address if you don't keep it, because you're going to come back to me in 3 years and you go, Jerry, that was friggin' amazing. Now you could take it one step further and open an account with either a Celsius, a Nexo, or BlockFi, which are third-party platforms that want to borrow your assets from you. And they pay you a wonderful yield on it, an interest. But they don't pay you the interest in money, in dollars. They pay you the interest on the underlying asset. In the business, we call it return on asset, ROA. As these assets appreciate, so does your valuation. And if your quantity is increasing, then you get an order of magnitude in the world of compounding that is not available in traditional financial markets. It is what we call in the business a double bagger. It's a double banger. You're getting it both ways. You're getting more asset and you're getting valuation in the form of the valuation, capital appreciation.
Makes sense. That's crazy stuff.
How do you not do that?
And it's mostly because of that third party sitting right there where they're able to offer that as well. So that's exciting.
Right. Now, the next thing is, and this is a little bit of a stretch, but it's really not that much of a stretch. And that is a bright, absolutely go-getter like yourself. I can tell right off the bat, you have an entrepreneurial mind, a blockchain insurance company. Cut out those middlemen. Allow the insurance policy holders with their premiums to be staking the system and create the liquidity within it to handle the claims. You get the right oracle that can get the data from outside the blockchain to put it in the blockchain if a claim needs to get paid or how those things work. But I'm telling you, if you don't, you're going to watch somebody else do it.
Yeah. So that's the interesting thing that you bring that up is that what's happening within the insurance industry, as you guys already know, is one of the oldest, most outdated, boring paperwork filing, like insurance and like law is like right there. It's just like, it's basically contractual stuff. It's boring. It's outdated. Now is where we're starting to see the financial industry, the financial services industry, see a major boom in investing where technology is the main priority. And, you know, right now, some of the companies that we're working with, their priority is 100% technology. And so much so that I'm able to sit in Chicago and have a client in Florida, California, Texas, and I'm still able to service my client through a webinar, through a Zoom call. And they, you know, they're excited to meet with me every time that we meet because they understand the value that I'm bringing to them just from that call. And technology allows us to do that. So when you talk about the now kind of the merger of how insurance claims and the biggest wealth creation industry that has been in the U.S. since its formation, the biggest, you know, wealth creation industry is now going to be, you know, getting now tied to Bitcoin. I think that's an explosive idea that you got there. I'm glad that you brought that up.
Yeah, I'm not saying quit your day job and start it, but I'm telling you, hey, Phil, good to have you, man. Phil Wright is a golf pro down in Melbourne, a guest on the show, great guy. Really smart guy, real humble though. So he doesn't come off smart. Listen to him, he's smart. Love him. You know, you have an asset that is so valuable, and it's called time. You're 24 years old. You have the opportunity that 90% of my audience doesn't. Most of my audience, or a great deal of my audience, is in their high 30s or above. You have the most valuable asset in the world in abundance. Please don't squander it.
Yeah,
like a
absolutely.
lot of us did. You know what I mean? So I'm just said that. I put it out there. We're going to move on with the show.
No pressure. No pressure.
Yeah, no pressure. Let's bring in our lady on the street. Always has great questions. Always brings a special little something to the show every time she comes on camera. Well, let's welcome in Bitta Avenue. Bitta!
Hello, everybody. Happy Friday, guys.
Happy Friday. Happy Friday.
So I saw you backstage for a little bit in the green room. Your thoughts on what's going on with the show so far, what you're thinking, what you're seeing, what you're feeling, and then let's get into some questions.
All right. Well, it's great that he gets to share his experience and information, and then you get to share your wisdom with him as far as the crypto world, because those are like literally the opposites of each other, the insurance world and the crypto world. So it's kind of nice to kind of bring those. And Jerry being from the new world and you being from, the traditional world is kind of a little bizarre. It's like
the old guy's talking crypto and the young gun is talking an industry around making money for the last 120 years.
Isn't that great? This is the beautiful thing about the new world that we live in, I guess. So yeah, that's wonderful.
Let me take just one second. I really want to say thank you to Rob over at Digital Asset News for the super chat. Great stuff. How about an insurance company that we can contribute fiat and transform it into crypto inside the policy?
Man.
Yep.
Oh my God, Jose, that is a $1 trillion idea.
That's hilarious. I will say, guys, I personally, all I am is an agent. I'm an educator. I'm somebody that is actually working within the community to make sure that I share the information. So I'm definitely going to bring this up to somebody that has the higher pay grade for me. That's an amazing concept. I think that'd be something that definitely. I'm already thinking that a lot of regulation is going to go into it, guys. You do realize that insurance, most insurance companies. All insurance companies have so much regulation around them. There you have FINRA, and then you also have on the opposite end as well with the crypto market. That's essentially going to be, if you want to merge the two, there has to be some form of regulation there. I'm not sure exactly how we're going to pull that off, but I think with a lot of voices, I'm sure there could be some form of like that in the future. No doubt.
So Bitta,
yeah, that's actually one of the main conversations that I had with Caleb, which is his partner. Is one of the reasons that I had that conversation is in talking about the Roth IRA and being able to trade and invest within the policy, that to be able to trade on your own and actually self-direct what you're investing in. I was always curious about, hey, can I do that through insurance? And even though at this time they're not able to do it, I'm hoping that eventually they'll get there, because I think that will be more of a necessity, especially with everything that's going on in the world, right? So one of the main questions, I guess, would be which is the very basic question: why would somebody want to get an insurance policy to grow and instead of a Roth, as far as tax shelter is concerned?
Very good question. As far as tax shelters, very similar tax shelters. Very similar tax shelters. They actually refer to the IUL, the new policy with that cash accumulation. They call it the rich man's Roth IRA. Personally, I will say that I actually would prefer, and this is a great segue to what I wanted to talk about, where insurance actually offers guarantees. So they have what they call the corridor, right? So you can grow with the stock market. So you'll be catching interest inside of your life insurance policy, and they're actually going to give you a limit as to how much you cap. And on the opposite end, the beautiful thing is that they're actually going to give you a floor of 0%. So you participate with the market. When the market goes up, you actually get those gains up to, I would say, 10 or 11%, right? But when the market goes down, these insurance policies have adapted. The new life insurance offers a policy where it's an indexing growth. So instead of being variable where it goes up and down and up and down and up and down, it participates with the market, gives you the interest, but when it goes -1, -2, -30, -50, you stay at 0, you flatline, and you wait until it picks back up. And that's what you call indexing, where you're essentially growing. And I love the fact I was watching Jerry's previous episode, Jeff Booth.
Jeff Booth, author of Price of Tomorrow. Yeah.
You guys were talking about a lot about compound interest. You don't get compound interest in any vehicle that you lose money. A lot of people, they invest, and it's great to participate with the market because you're looking to get those gains. But what happens when you get wiped off your feet and that market just, boom, you got to correct, right? The market correction, it's always going to come. What goes up must come down. And a lot of people, they might be on the opposite end. So it's a beautiful concept that I want to make sure that people understand. Long-term investing is a great concept. Short-term, pulling in, pulling out, pulling in, pulling out, it's not going to do you any well unless you are actually, you know what you're doing. And that's why I love this content that you're putting out there, because you're educating people as to saying, hey, if you want to experience compound effects, not only time has to be on your hands, but also you want to make sure that you don't lose in any of your accounts, that you have a guaranteed. And that's why a lot of people, they have those, what they call those stop losses, right? Those stop losses, or even they have those options. They call option traders, right? So a lot of people, they want to make sure that compound interest applies inside a life insurance policy that potentially an IRA and a Roth or a traditional might not be able to benefit from.
Right. Well, traditionally, in the capital market structure, the only way to do that was to have your asset pay you to own it in the form of a dividend, or if it was a bond, the form of a yield, right? And the only way to compound that was to keep it rolling in. So you've got to initiate the process of either dividend reinvestment or rollover or sweep in or whatever. There's many different terms that have been used for different things. The point being that this digitalization is happening. Trust me, it's happening. Digitization of assets will bring products to the marketplace that may or may not require regulation. Most of them that will just be digitalized forms of things that already exist in the capital markets. Okay. I happen to know that very large insurance conglomerates have very diverse asset sets that they own. It's part of how they built their business. They don't have a simple model where the amount of premiums in versus policies paid out leaves a net balance. It isn't like that at all. And so for somebody, they are going to create insurance products that have assets like Bitcoin, like Ethereum, like XRP and others that have this incredible dynamic of fixed supply, which creates valuation through one of the most important elements that not a lot of people are talking about. It's called network effect. As new users come onto the network, the value of the network grows exponentially. Now, none of us in the crypto space have experienced it yet. We haven't hit that inflection point where demand far exceeds supply. We have in very short bursts, but nothing prolonged, nothing really exponential, right? But it's coming. Trust me, Jose, it's coming. It is going to eat up everything. Because all these, this world that you live in of contracts that are created by attorneys, well, those contracts are just going to be digitized, and people will be able to go to libraries, open source libraries, and pick cookie cutter contracts or contracts that can be amended and adjusted, put into a smart contract, and the smart contract will execute because it has APIs tied into this, or it has the keys to that asset, or it, what have you. 10, 15 years from now, I honestly believe that'll be commonplace, or at least utilized by a great deal of people. Whether it ever hits, $6 million people user bases or not, I don't know. But it's going to be a monster business for people who are able to create it, get a brand, get some trust in the brand, and get some, what we call rubber on the road, right? Britta, I just realized I've capitalized on your friggin' time on the show. Bad Jerry. Let's turn it back to Britta. I apologize.
Oh no, I sit back and listen to you all day, so I'm learning quite a lot. So it's a lot to absorb here. The other question I had for Jose is, as far as when I think about insurance, I always it might be like a negative bias, but you pay it in, and then you get nothing in return. And like, what are the benefit of having it while I'm still living? Like, yeah. I don't want to pay for something that only benefits my family after I die. Yeah,
absolutely. And that's the conversation that I have a lot with millennials is a lot of people are very I would say very focused on that concept of you buy a term policy because it's super cheap, right? And you pay for it. But a lot of people are getting to that point at the end where that policy eventually expires, and then they have no life insurance. They're already older. And by the time they want to get a life insurance policy to make sure that they leave something behind for their funeral expenses, they end up, it's too much. It's too costly. It's expensive because they didn't want to prioritize having a permanent policy when you're young. And this is very, very crucial for people to say, hey, Jerry understands the value of time just as much as I do. If you are going to get a life insurance policy, and if you want it to use it as a creation of wealth accumulation, permanent policy is the way you want to go. And more specifically, don't just put in just the cost of insurance, because again, that is a cost of insurance. A lot of people have to understand you're still paying for something. There is $500,000 on your head. So if you were to pass away, guess what? That's $500,000. Thinking strategically for the future, you're young. You don't see yourself just running one business. You don't see yourself maybe just being an employee. You want to make sure that you establish yourself and saying, hey, if I can pull money from here, if I can pull money from here, if I can, and diversification is the conversation there. So Bitcoin, boom, you have your other assets, you have real estate, you have insurance, you have so many different homes of money, but which ones are really going to allow you to use it when you really need it? And life insurance today has evolved not just for when you die. The conversation is, I know you guys know what a bankruptcy is. It's not, it's nothing good. 65% of all the bankruptcies in the US, 65%, that's more than half of all the bankruptcies, are due to, guess what, major health issues. I'm sure you guys heard of medical bankruptcy. Cancer isn't cheap, stroke, heart attack, and the list goes on. You're more likely to use it while you're alive. So life insurance has evolved, not just for a death benefit for you and your loved one when you're gone, but who's to say that you're not going to suffer from a car accident? Who's to say that you don't get a severe burn? Who's to say that anything were to happen? COVID is now peaking in the US. So life insurance allows you to not just use it in death, not just allows you to use it in life, to pull from it, again, tax-free, to pay off those medical expenses, and you don't have to worry about taking out from Bitcoin, liquidating your assets in real estate, liquidating your 401k, your retirement, liquidating all these other things, and filing medical bankruptcy just to stay alive. So life insurance allows you not just to use it in death, allows you to use it in life, in living conditions, but more importantly, it accumulates wealth. So all that money, you're young. Somebody who's 40, 50, 60 might not have that time. If they're only going to put in $100 a month, that's not going to be a lot of time for them to accumulate a significant amount for retirement. So you being young, going into a permanent life insurance policy where you can fund it properly, I guarantee you 20 years later, right? Like Jerry says, it's gonna be something that you're gonna come back and say, hey, I'm glad that I got this when I was X amount or when I was X years old, because it now serves me when I want to buy my first home, when I want to send my kids on a trip, when I want to do the things, and I can pull from that money. Guess what? Tax free, tax advantage. So that's a big thing, that not just for death, but in life, it's a very big key to your wealth creation. And it establishes that safety net. You don't have that safety net anywhere else. What is $100 in a Roth IRA? What is $10,000 in a Roth IRA? That's $10,000. So if you were to pass away, or if you need to liquidate that for your health benefits, that's $10,000. What is $10,000 in a life insurance policy? I'm pretty sure it's $250,000, $500,000, $1 million life insurance policy where you can pull from it. Now that $100 a month now turned into $500,000 from day one. Your net worth increased, where now you can start to strategically move forward and lay that foundation. Now investing in Bitcoin, all these other things, because why? You have that safety net. So if you do get sick, you don't have to liquidate your assets. If you do, if an emergency comes up, now you have also another piggy bank, because life insurance is liquid, it's safe, it offers a great rate of return because it's indexed and tax deferred, tax free, tax advantage under the 7702 code, IRS code. So
7702. We ought to write a song about it. I love it. All right. So it has been an extreme. Hey, Britta, any more questions?
Did that help? I hope that helped.
Yeah, it does. It helps quite a lot. The other questions that I had, like a last question, I guess I would say, is when you say, is it kind of like Roth where it's like self-directed, or like does the company invest it? Like, how does that work really?
Great question. So there are a few investment strategy options that you can choose from. There is a cap focus, but again, if you're going into an indexed strategy, it's going to be that indexed strategy. You have the cap and you have a floor, right? And we can manage how that moves here in a little bit and go more into detail, but that's where you want to sit one-on-one and saying, hey, which policy is best? How can I structure it? Because again, you can get a lot of people, guys. I will say this, because people do have to know, life insurance is something that is like a bad connotation, because their life insurance agents don't do their proper due diligence, right? They don't say, hey, let me structure it this way because it's better for you long-term. So that's where you want to make sure you sit down with the right person and get that the right way. I will say this. I did see a question about business owners. Business owners do offer that three-way kind of tax punch, right? Because you get the tax advantage, right? I think here it is. But as a business owner, since in my 20s, I see tax increase, right? Tax increase and not supportive owners. So with a life insurance policy as a business owner, it's what you call an executive bonus plan, or I'm not sure if you've probably heard of a business buying a policy on the key employee, right? On the key employee, where they're able to now use it as a tax deduction. Okay, a tax deduction for the business at the end of the year. So it helps you reduce the taxes by having a higher business expense. It also allows you to grow your money for the business tax deferred, and at the same time, you're giving yourself benefits. So a lot of people, when they start their business, they don't have a 401k employer. They don't have somebody that's matching them on it. No, they got to figure that stuff out. They're an entrepreneur. They got to figure that stuff out themselves. So your life insurance policies allow you to get into that retirement plan early for your own business, while also creating that extra tax deduction for yourself as well. Great content. I appreciate that. Thank you so much. Where are my my pressure meds? Hot topic. Ooh, thank you for that. But if that helped, I think Bita, I know you had a different question, but I hope that helped as well.
Yeah, we're all good now.
Awesome.
Take it away, Jerry.
Well, I tell you, for one, I absolutely see a place where when I start having to deal with real gains, right now the gains I'm dealing with aren't anything to write home about. But I see it, and it's not that far in the distant future. I see myself creating a Jerry V. Hall LLC. I see myself insuring the president and CEO of the Jerry V. Hall LLC, which happens to be Jerry V. Hall. That's me. I am going to insure myself to the neck. I was going to say another body part. But I'm going to insure myself up to my neck.
Yeah.
And the reason being is because if anybody out there, if you have ever had to deal with a parent or your, passing, and they didn't have their shit together, it is a nightmare dealing with probate. It is not only a nightmare, it's expensive. You want to have your shit dialed in. Trust, the proper delineation of your insurance plans. Any wealth manager, any estate planner will walk you through this and direct you to a guy like Jose for this element, or so-and-so attorney for that element. And when it comes time, you will need professionals. You will need a team. That's why I suggest go check out my Beyond Moon series, where it's all about crypto wealth, understanding these things, because they're all going to come. Any of you that have built up a personal portfolio and think that you're just going to sell stuff and buy yachts and houses are going to be in for a rude awakening. To take your capital and immediately go buy depreciating assets with it.
Yeah.
That's how lottery winners go broke. That's how athletes with big contracts, when their playing career is done, go broke. The secret of this game is to keep everything that your investments have created for you and live off of what they can create for you. Yep. Part of that is the concept of keeping it, not paying taxes on it, but in legal ways. Yes, these are all structures that the wealthy families of the world have employed for years and years. They don't teach us these things. They don't give us courses in financial literacy and show us, okay, when you're young, you spend your time making money. Learn how to put some of that money to work making money. And at some point, your money will make enough money to support you without spending your money. There's no class. You will not find that in a kindergarten, grade school, junior high school, junior college, or university. You will not find that there. Yeah. However, you will find it right here on this channel. When we bring in guests like Jose and great contributions from people like Britta, we're at that time, folks. I'm looking at the clock. I've got to bring in Brady. Brady, bring yourself in here. It is time to contribute, young man. It's time to start earning your paycheck.
Yeah.
So Brady, hang out in the studio, because we're going to go in order. Britta, your final thoughts before I put you backstage, and you'll be hanging out waiting for the after show. Final thoughts.
Not today. I am all done today. I've been on vacation all week, so my brain is on. It's been turned off for a while.
Okay. Jose, your final thoughts before I put you backstage for the after show.
Yeah, I will say this phenomenal thing that you just pointed out. I don't want to take too long, but you did say there's phases in your life. Yes. First, accumulation phase. Then the preservation phase, and then the last one. This is the second thing that I always have a conversation with my clients is annuities. He mentioned something that this is how lottery ticket winners go broke. There's options. You can take $5,000 a month guaranteed for life, or you can take that $1 million cash up front. What would you choose?
$5 grand a month, baby.
That's what it is. So an annuity is exactly that. Pensions are funded in annuities because annuities offer that guaranteed income for life. If you guys are looking for a strategy for retirement and exit strategy, look at 401k rollovers into what they call let me not get into all that stuff, but there are options where you can have guaranteed income for life. So a phenomenal night, guys. Thank you so much, Jerry, and definitely looking forward to connecting with everybody else offline. Enjoy the rest of your night, guys. Thank you so much.
Brady, get in here. Unmute it, kid. You're on.
There we go. Sorry, I had to do the old click button thing. Wow, this is, it's like all the things you wish someone told you back when you were younger so that you could start and have them done. As you said, Jerry, getting your shit together. This is a lot. But I guess this is what this is part of the cost that we must carry in order to look forward with the confidence of thinking, in 3 to 5 years, getting ourselves insured or figuring out how our LLC can, fund things. We're going to have to figure out how to keep it, because we're going to have enough of it to be able to, I guess, pay ourselves to figure it all out. Anyway, it's going to be a long journey, but having other people around thinking of the same things and having the same struggles definitely makes it more bearable and entertaining. So thank you all, and we'll see you later.
Oops. So my final thoughts, folks, it's just simply this. Enjoy the journey, right? Many of us that have been here for a while have experienced something in the last 10, 15 days that hasn't been present for a lot of us. And that is the actual emotional response to what we knew would be coming. This market picking up is just starting. And it's going to roll out in phases, right? It's going to roll out in phases. Not every one of these coins or projects is going to surpass all-time highs by multiples of 10, 20, 100, or 1,000 at the same time. So you have your strategy and you're continuing to evolve it as new information comes in. This channel is trying to help you with concepts and thinking about, you know what? Am I going to be in a position where it does benefit me to have an LLC and structure myself as a business in what I'm doing, whether it be me and my YouTube channel or me and a farm that I want to build or whatever it is. You decide those things for yourself. It may be from a tax advantage, a liability advantage, etc. These are all things to think about and consider and understand. We have the opportunity to be doing the research now in preparation for these events. Keep in mind the best advice that I've gotten over the last couple of weeks when I am coming up with my plans of how to leverage this and do that and do the next thing. The best advice I got was do nothing. Your money's in. If you're still dollar cost averaging, still dollar cost average. Don't change anything just because the market is upticking. This is nothing to where this is going to go, folks. Nothing's even started yet. Bitcoin 30, 40,000. Talk to me. XRP, blowing by its all-time high. Then come back and talk to me. Ethereum rolling out 2.0, retaining its developer group and shooting past its all-time high. Then come talk to me. Right now, we're just heating up. But the world, new entrants into this market are happening. And I will tell you this, the one thing that I've learned, the greatest wealth creation is through network effects. And we're involved and invested in the greatest technological plateau or asset class that every single thing is around network effect. Every single thing. It is an exciting time to be alive. I want to thank you for your participation in the stream, all of you that have contributed. And for those of you that sat on the sidelines just watching and listening, I hope you got something out of this. Down in the links below, many of you have been using the Call Jerry feature, and I've really enjoyed the conversations and new relationships that I've been developing over the last couple of weeks with all you folks that have made appointments. And we've got to have conversations on the phone regarding your investment strategy or your exit strategy or what do you think about diversification versus, concentrated asset accumulation? These are all incredible topics. I'm so grateful that you're finding value when you tune into this channel. Next time, I ask one thing: bring a friend, have them hit the like and subscribe button. Let's grow this a little bit so the YouTube algorithm can get this information in front of more people. It's been an absolute joy. We got an incredible holiday season coming at us. And until next time, everybody, Pura Vida.